Things aren't always as they appear. I think it was Eddie Murphy or Richard Pryor, one of them, who said, "Who are you going to believe, me or your lying eyes?" Well, of course, in his case, he was talking about his girlfriend seeing him with another woman. But here I'm talking about the way different things are presented so that they seem or appear to be something other than what they really are. There's a whole world of replicas, things that are made intentionally to look like the real thing, which may be very rare or very expensive. For example, replica watches, such as Rolex or Patek Philippe, as long as they're presented and sold as replicas and not as the genuine article, that's fine. But when they're presented and sold as genuine, now that's dishonest, a scam, and downright thievery, especially when they're sold at several times their worth. It's especially criminal, in my opinion, when that kind of misrepresentation is carried on in the financial world with financial products. It's more than just withholding information that would likely discourage a person from buying into a product. It's about presenting a product and making claims for it that simply aren't true and have the goal of making the client believe that it is in their best interest to buy into it. Now, I'm not saying the products themselves are scam products, but that but that the way that they're presented and misrepresented for the sole purpose of the advisor earning a fee or commission. For example, qualified retirement plans such as 401ks and others, not scam products, but very often they are presented in a way that steers the client into believing that they are the best way to save for retirement. The presentations I've sat in on usually start off with the advisor posing the question, who likes free money? Of course, everyone likes free money, but would it have the same appeal if you were told that in order to get the free money, you'd have to first invest your hard-earned money into it, and then at any time, all the money, the free money and your hard-earned money, can all be snatched away from you, and there's nothing you can do about it. There won't be any warning. It'll just happen, and there's nothing you can do about it. But when the presentation is all about how you can get free money with your employer matching up to a certain percentage of your investment, and you can figure on gaining 8 to 15% per year, well, all the client is going to hear is free money and gaining 15% per year. But the truth is, all the money that is put into stock market is at risk of total loss. It can happen without warning, and there's nothing you can do about it. Once it's gone, it's gone. The documented historical record going back to the inception of 401ks shows that, on average, investors in 401ks earn only 4.5% per year, which is pretty good, actually. But then when you take your distributions, you have to pay income tax on the money, which is currently about 30% on average, taking that 4.5% down to 3.2%. Still not too bad in the current economy, but not terrific. And a far cry from 8%, let alone 15%. Now, I'm not saying that 401ks are a bad thing. I'm not against them or other qualified retirement plans. Personally, I do believe they have their place in a well-rounded financial plan, but I don't believe that they should be the basis for a person's financial plan. Again, any investment in the stock market is at risk of loss. So I believe, and a lot of financial planner instructors teach, that life insurance should have that position of the solid base on which a person's financial kingdom should be built. It's called the financial pyramid. After all, a major reason for building a financial kingdom, so to speak, is to provide a legacy for your loved ones. And a good life insurance plan does exactly that. And that benefit is paid with no tax liability in most cases. Then after a good life insurance plan is in place and you have some discretionary money that you can stand to lose, investments that have some risk may be considered. That's what I've learned, and that's what I believe is the smarter way to go. And that brings me to, what is a good life insurance plan? Again, personally, I hate putting money into something that I will never get any value from. So for life insurance to be a good plan, it would have to provide some cash value that I can take advantage and make use of. Pretty much any whole life insurance policy will do that. Some are better than others. Some insurance companies are better than others. And those that allow for designs that provide the greatest cash value growth are the best. That criteria leaves term insurance completely out. Term insurance never grows any cash value. And unless you die before the term expires, it doesn't even provide any legacy or benefit for your loved ones. Not only that, when you outlive the term of the insurance, you get nothing back. Big zero. Your money is gone and nobody benefited except the insurance company. Now, I have to talk about this for a minute. Universal insurance, whether it's GUL, guaranteed, IUL, indexed, or VUL, variable, which is an investment product, universal life is not what it appears to be. It is categorized as cash value life insurance, and it can produce some cash value, but cash value is never guaranteed in universal policies as it is with whole life. My biggest objection to universal life is really the way it is presented. In my experience, the agents selling universal life never explain the downside, and it's a big downside. They always talk about the potential for huge gains in the cash value by means of the stock index it's tied to. Rarely, if ever, do they properly explain the caps to earning potential and the fees associated. Universal life is based on a term policy with modifications that enable it to grow cash value if conditions permit it. But the biggest fee associated with universal life is the annually increasing mortality rate, just like term insurance. So if the client doesn't voluntarily increase the premium that they pay, eventually the fees being taken from the cash value will completely drain all the cash value and the policy will lapse. At that point, the client has no insurance and no cash value, just like with term insurance. Typically, universal life is designed to terminate after about 20 years, unless the client increases voluntarily the premium that they pay. So then, what is the best life insurance plan? It is a whole life insurance that is issued by a mutual company that offers participation in the company's profits by means of dividends, and a policy that is designed with cash-rich riders that significantly increase the cash value growth of the policy. That cash value grows tax-free, and the owner of the policy can leverage the cash value for anything they want, anytime they want. Now, these policies are also actually grow in face value too. That is, each year the policy receives dividend interest, and the additional life insurance is added to the policy without any increase in premium requirement. The policy will not lapse as long as the premium requirements are met. The premium never increases, and When the insured reaches age 100, the policy matures and the total death benefit is paid out to the owner tax-free. And that value will always be at least 2.5 times the total premiums ever paid in. So even if you don't intend to utilize the infinite banking finance strategy, having a whole life policy that is designed for it will always be the best life insurance plan, and one on which to grow your financial kingdom and legacy. Now, if you find this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. You have questions, we have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is below. We're here to help. We look forward to helping you. For now, aloha and mahalo for watching.